So we were answering some questions and getting back to those questions. We have, it's interesting. A lot of folks blew up when they had easy credit, tons and tons of credit cards. And so here's my question for you guys that comes from Kate. She wants to know the number of credit cards you should have. Does having too many credit cards actually hurt your credit score, even if the balances are paid off every month? What do you think about that, Mr. Consumer Reports?
Well, indeed, you can have too much available credit, and you can also have too much obligation on the cards you do have. So our recommendation is to, keep to a modest number of cards. Some people can get away with 0, especially if you have a debit card, 1 or 2. I don't think there's any really logical reason to have a whole bunch of them.
And Stacy, does canceling a credit card in good standing actually hurt your credit, and how much does it hurt your credit?
It does hurt your credit, and a lot of people don't realize that because they might have had a credit card they had for a long time, but then it's no longer the best card for them. For example, I have an airlines card, and I'm a little nervous. I don't really want to close it because I've had it for many years, but I don't travel anymore. But I care more about my credit score, and that's actually one of the most important factors that goes into your credit score is your length of credit history. So that is something that people want to be aware of.
All right. I like that. The other thing is that you don't have to say yes to every single offer. Here I was at Banana Republic today, just at a slight interlude between the shoot and Ask the Experts. And I had to buy a jacket because it's freezing in New York, and for some reason I walked out of the house without a coat. So I'm in Banana Republic, and there was a moment as I was checking out with my fantastic purchase. Do you want to open up a new credit card here at Banana Republic? You will save 15% on what you buy. And I did think twice. And Stacey, I said no because I just didn't want another one.
I think that's the smartest thing. I've actually been told that the people at my FICO that it can hurt your credit score to have too many credit cards. Mm-hmm. And every time I'm in line at Banana Republic or some other store, I always want to tell the person in front of me, don't do it. Mm-hmm. But they often do because they want that 10 or 15% off.
Mm-hmm. Oh, by the way, Annette, and the chat room is up and rocking and rolling, and Annette says she pays her Discover card balance each month and on time. Could changing my billing date be a way that Discover is trying to get more money from me? I'm thinking, yeah, of course. And so, by the way, Annette, I'll tell you what I would do. I'd pick up the phone. I would call Discover. Because don't you think that people, they don't like to really do this. It is a pain in the neck. And I would get some customer service representative, and I'd get you on record and say to them, what is going on? Explain it to me. What are the new rules? And send whatever you sent to me in writing again so I get it.
But you know what else you could do? And this is something that anyone can do. You call up your credit card company, and you actually set up an automatic payment. So they can go and pull the money from your bank account, and then it doesn't matter what the date is because they'll just take care of it on their own.
Right. That's true. That is true. All right, I got some more for you. Kathleen wants to know, if you ask your credit card company to reduce your debt, how will your credit score be affected? In other words, I've got a $20,000 credit limit. And, Greg, I say, you know what, I don't need $20,000. That's dumb. Make it $10,000. What happens to my credit score?
It would depend on a couple of things, one of which is how much you owe on that card, because if they reduce the debt available on that card and you have debt on that card, you're increasing that ratio. So in some ways that looks worse in terms of your credit score.
Oh.
Because of that credit utilization ratio that you're talking about, I don't actually see why you would want to reduce the amount that you can charge. Unless for some reason you're sort of an addict and you just can't stop yourself.
It's there and I need it.
Right. If that's not the case, keep it as high as possible because it's always nice to keep that ratio of credit utilization as low as possible. That really helps the credit score.
All right, I got some more for you. And the questions keep coming. If you've got a question, send it to us. AskTheExperts@moneywatch.com. Megan, if you're getting anything, just shoot me an email. Megan's our producer, so say hi to Megan when you say AskTheExperts@moneywatch.com. Okay, Andy from Illinois has another question about business credit cards. And Greg, Consumer Reports found that more individuals are getting offers for business credit cards. Can be trouble. I mean, because a lot of people actually, they were sole proprietors, they're consultants, they were trying to make a little extra money on the side. Why is a problem with the business?
Well, business or professional credit cards, and a lot of us are seeing these offers in our mail now, are not covered by the provisions of the Card Act. So if you get one of those, it may look perfectly fine. It may look like any other card, but you're actually not getting all the protections you'd get with a conventional credit card.
And they can kind of obviously get around a lot of the rules that were intended for consumers, not for businesses, right?
Right, exactly.
Don't like that. Okay, here's a question. So Arnold asks, is it possible or worthwhile applying for new credit cards to replace my 3 current cards at, ready for this, 29%? Okay. He said he's got divorce, unemployment. His outstanding debt is $700, $445. I'm going to do the quick math for you, okay? He owes about, 12 grand. And he says, should I just go try to get new credit cards to replace my 3 cards? His credit score is 670. What's it going to do to try to – you can't game that system, can you, Stacey?
I really don't think so, especially if he's talking about a divorce right now. His credit could take a huge hit because he could be closing lots of accounts. There could be debts from his spouse. A lot's going on. The last thing you want to be doing is playing around with your credit cards. I think he needs to settle his personal life first and start paying off that credit card on time as well, and then he can start focusing on the other stuff.
Let me ask you something, just on the divorce note, because I'm sure it was the ex's fault, all of this. But now, your ex does something wacky, it blows up your credit score while you're married. When you get divorced, you still have that crappy credit score, right, Stacey?
You do. You are stuck with what your ex did, and worse, you are stuck with debts that your ex had put on a credit card. They're still yours. Sometimes in a divorce agreement, you can try to put in language where the other person promises to pay off certain debts.
Oh, yeah, that works, because it works so well during your marriage.
Right, but let's say, if you have a joint credit card, though, it doesn't matter. It remains yours because the credit card company will go after whosever name is on that card.
All right. Now, I have another question for you. Yes, Megan, I have this question. Don't go crazy. Here we go. I currently have $7,135 in student loans. Interest rates are pretty low, from 2.2% variable to 8% fixed. So student loans. I work for the federal government where job security is very good. My FICO score ranges from 732 to 768. I mean, this is like stellar. She's got $8,250 in savings, but she may need to buy a car in the next year. So she was thinking of applying for a new credit card, doing a balance transfer where there's little or no fee so that I can pay off all of my student loans. What do you think, Monsieur Greg? What do you think about taking this student loan, which basically they've got low fixed rates and incredibly low variable rates? What do you think about taking that, replacing it with 0% credit card, and cranking and trying to pay it off fast?
I think that's the key. I'd be really, really careful because these 0% switch offers, they can look really great. They do have a high upfront fee in some cases, often 5%. So if it's $7,000 in debt, say it could be $350 right off the top. And then there's a certain period of calm, a year to 14 months or something, where the zero interest is maintained. But then at the end of that, it can it can go anywhere. It can go way, way up, and probably will. And who knows what that person's situation will be at that time. So, I think you're really sort of playing with fire here. You could do it, and if everything works out, it could be a good thing. But there's always the possibility that something will happen, and you could just be in a bigger mess than you can imagine.
Stacey, you're nodding in agreement.
I am. I like student loans. I mean, sure, we'd all would love to go to college and not have them. But if you do, that seems like a much safer sort of debt to carry around than credit cards, which they could just change on you at any time for no reason.
And let me ask you something. In terms of the credit score issue, I feel like I'm becoming a little bit hyper crazy about the credit score thing, and I think it's everyone else is as well. Like, no one ever talked about credit scores like 10 years ago, but here we are now talking about it. Is student loan treated differently in terms of credit scoring, Stacey, or is it pretty much one debt, next debt?
To be honest, I'm not exactly sure. Whenever I speak to the folks at Fair Isaac or My FICO, they really focus on credit cards. Mm-hmm. They focus on auto loans. There's even the mortgage, and they're not really focused on utilities, for example, so much. And student debt is not something that we've talked about a lot, so I'm not exactly sure.
You know anything about that, Greg? You think that is it from between student debt and credit card debt from a credit score perspective? You think it matters or not?
I don't know the answer to that
I
specifically
love it.
either.
I stumped the experts.
I do think that you're right that we might overemphasize credit scores in many cases. I mean, they're important certainly when you apply for debt, apply for a mortgage, and so forth. They can also, in many cases, figure into what you pay for auto insurance and things like that, for example. But generally, in your day-to-day life, they probably aren't going to affect you a whole much.
Especially if you don't have to do anything if you don't have to buy anything big in the future, right?
Right.
But now they say that employers are looking at
Yeah,
credit scores too.
sneaky.
I think, and then a lot of the other different types of insurance companies, they're looking for any sort of excuse to try to get you to pay more. So they might not be everything, but they do matter.
Yeah, and I think that I think there's also that weird shroud of secrecy around FICO around Fair Isaac and what is it exactly. And I get it; they're trying to run a business, but because it affects so many consumers, it'll be interesting to see whether the new Consumer Financial Protection Bureau kind of starts to take up that notion. Like, are you like messing with people here? Just tell people what they need to do to clean up their credit. Because otherwise, it's like people are really operating under this cloud of uncertainty. It seems pretty unfair to me. What do you think, Stacey?
Well, I do actually think that there are a lot of articles out there that tell you the most important things you can do to have a good credit score, such as something as easy as paying your bills on time, having that low credit utilization ratio. So I don't think that it's too secretive, but the company does always say their scoring system is proprietary, and they won't share the exact information with everybody. But I think the bigger problem is just financial literacy in general. People just don't understand credit cards or their credit score because they haven't really been paying attention. But if they read the articles, they are out there.
Yeah, well, that's true. It just seems to me like it's taken on like such a big thing, and I heard this story on radio where this guy's trying to like achieve perfection. He wants a perfect credit score. That is his goal in life. And I thought, wow, he really needs a hobby.
Well,
I think that I think we are kind of winding down here. I want to thank everybody for bearing with us with our technical difficulties, and I want to thank Greg Doherty from Consumer Reports, who's fantastic. And go check out Consumer Reports this month because hold on, I'm going to do this again. Ready? The best products of the year. Very cool. So it's, there's great stuff about credit cards in there and about anything else you could possibly want. And also check out Stacey Bradford's blog because she is awesome. She writes the Family Finance blog on moneywatch.com. And she's got a lot of articles about credit cards, about other issues that affect your family and education. And thank God, Stacey, you're having kids and going through all these things yourselves because you've got great source material.
I do have a lot of material to draw from.
So really want to thank you guys so much for joining us today. And if you've got more questions for next week's podcast, shoot us an email, asktheexperts@moneywatch.com. Thanks for joining us. All right, thanks for watching.